Why does profit not actually equal cash in the bank? What's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maskill, where I focus on helping guide you to have a business that produces consistent, positive cash flow. In doing so, you will have clarity and confidence that your business is headed in the right direction and you can achieve the goals you set out when you started or acquired your business in the first place. Today is a solo show. It is the first Monday of the month when this is going live. The topic we are diving into, I hear this all the time, especially from prospective clients and just having conversations day to day with owners in the trades. Paul, my accountant says I'm making money, but where is it? It is not in the bank. And there's some good reasons for this, and there's also ways to fix that. So that's what we're going to dive into today. And what I really want to focus on is cash flow. The most successful businesses out there are the ones that are creating that consistent positive cash flow. They are building a better business so they can build a better life. And really, that's really my premise of why I do what I do. Every business owner started their business, whether they acquired it or started it from scratch, with a dream, a vision, a goal of what would life look like when I get there, the freedom we'll have, the money we'll make, the wealth we'll build, the time I'll have. And unfortunately, more often than not, that actually doesn't happen. So how do we build a business that produces predictability, where we can scale with confidence, where we can sleep at night? That is what we do here at Blue Collar Business Advisors as a CFO for companies in the trades. My job is to make sure you know exactly what levers to pull to achieve your definition of success, freedom, and wealth. So here's the problem that I'm seeing more than ever. Most business owners in the trades don't actually understand their financials. We have more technology than ever. There's AI everywhere. We have reports, we have spreadsheets, we have all these things, but if it doesn't make sense to us, we don't know what to do with it, it doesn't really matter. So how do we not only get clarity on our numbers, but then use them to guide our business? And here's what I see going on in the marketplace. Most business owners are one of two things in the trades, and this has really kind of changed significantly, I'd say, in the last 4 to 5 years since COVID. Historically, almost all companies in the trades were started by the company was started by a technician. So you might be a technician. You were working for somebody else. You didn't enjoy working for somebody else because you wanted the freedom. You didn't want to work weekends. You wanted to make more money. Maybe you didn't like their sales process. You thought they were charging too much or not charging enough, or there wasn't room to grow. Whatever the reason was, the technician decided to start their own company. They didn't start it because they love financials. They started it because, one, they're really good at their trade and they thought they could do it better. More often than not, they can do it better. However, we need to turn better into actually running a better business, making more money and building wealth and having that prosperity that we talk about on the show. So that's one camp. The other camp that is growing significantly, there's probably plenty of people listening to this podcast today that followed the gurus. They bought the $10,000 course or mastermind, went to the workshop and quit their job and decided to buy a home service business because everybody said it was easy. You don't need experience. You just need to hire a GM. You can just use spreadsheets. You can use SBA funding. It's going to be super easy. It's going to cash flow all this crazy money. And I'm here to tell you that is not happening on a regular basis. Why do I know that? How do I know that? Because I have many conversations with people that have done that. They quit their job. They bought a $2 to $5 million, $8 million home service company, and it's not going as expected. So both of those camps are struggling with cash flow. Their profit does not equal cash in the bank, and that's what we're going to get into today. Both of these are dangerous, especially once you start doing a few million dollars. If you're doing a couple $100,000, it's pretty easy to recover from any of the problems you run into. Why? Because you're a technician and you're good at it and you can go make more money. However, once you have a $2, $3, $4, $5, $10 million company and cash flow starts to go the wrong direction, it is really difficult to turn it around quickly. There's many reasons of why that happens. Sometimes we're just chasing the top line. So we want to get to 7 figures, then we want to get to 8 figures, or we want to get to 5 million, we want to get to 8 million. And here's what I've learned over time. Many times people tell me that's their goal, whatever that number might be. Let's call it $10 million. And then I ask, why do you want to get to $10 million? and they don't really have an answer. Usually the answer is, I don't know, that's just always been my goal. Well, that's not really a good reason to do something if it's not tied to something. So we need to know, why are we chasing what we're chasing? Otherwise, if you ever make it to 10 million, then you're going to want to go to 20 million, and you're probably never going to be fulfilled, and you're probably never going to have prosperity. So usually the technician-led business, they are chasing the top line. They're always putting out fires. They're trying to keep the ship afloat. They're trying to do all these things. And when you try to do everything, you're not really an expert at anything. So that's that camp. That is the technician-led started company. The people who followed the guru, the acquirer of the business, they're just now realizing this is a lot harder than everybody told me it was going to be. The owner said they were only working 10 to 20 hours a week. I'm working 60, and I'm still, barely above water. We're sinking quick, and realizing that this isn't real estate. A home service business can go to zero really quickly. If you have a lot of debt on the business, a couple of bad months where your revenue drops a couple $100,000 puts you behind the 8 ball. That's really hard to get out of, because a couple bad months means you probably need a couple good years in cash flow to recover from that. So that's really a big issue that I see out in the marketplace. And what we're going to dive into here further now is profit is what the paper says. Your accountant, your bookkeeper might say, hey man, here's your P&L for the year or for the quarter. You had a really good quarter. You had a really good month. You had a really good year, but there's no money in the bank. Money in the bank is real. Profit on paper is not real. So let's first dive into what is eating into the profit. We're going to go over, 5 or 6 different things, maybe more, depending on where this conversation goes. The first thing is accounts receivable. So what is accounts receivable? If you don't know what accounts receivable is, nothing wrong with that. What it is when you go do a job and the job is complete, you send that customer an invoice. If they don't pay you on the spot, that is now a receivable. It goes into your accounts receivable. If you go to your QuickBooks Online or QuickBooks Desktop, there's a report called Aging Receivables. It'll tell you how much money you're owed and how old is that money, which is, a really good idea to know that, where that number is, how much money you're owed, when was it due, because that's the cash that we're owed that our P&L says we've already earned, but it's not in the bank. Why is that an issue? Because the average home service business has less than 1 month of cash in the bank. So what happens when you don't get paid on time? All of a sudden you become a bank. You are lending money to people who owe you money at 0% interest. And if you have less than 1 month of expenses in the bank, you are then going to have to dip into debt in order to continue your operations. Anytime you have to dip into debt, it takes a lot longer to get out of it than it did to go in it, because that's just the way debt works. And then interest starts to pile on, and it becomes this vicious cycle downward that is really hard to get out of. So that's the number one issue, accounts receivable. The second issue I see very often is vendors. So if you have vendors that sell you stuff on credit, and then they send you a bill once a month and you pay it, that's causing a big issue. The number one reason, in my opinion, it's causing an issue is most companies are not keeping track of what that dollar amount is in their accounting software. Most QuickBooks that I look at do not have a thing on their balance sheet in their liabilities that has all the vendors and how much they owe in real-time basis. So that's why their P&L looks better, because it's not actually it's only hitting the books when they actually pay the bill. And if you haven't paid the bill this month, your P&L is going to look a lot better. If you haven't paid it in 2 months, it's going to look a lot better. Now, what we need to do is pay our vendors on time for many reasons. One, they're going to give us better pricing over time, but it also allows us to know where our numbers are at. So that's the second biggest issue I see, is that part of the vendors. And the other part of the vendors is if we have technicians going to supply houses and there is no PO system in place, they are buying things they do not need. Technicians are notoriously known for buying more than what they need, or buying things they don't need at all because they love to have it on their van just in case. Well, what happens after a couple of months when you go clean out the van, or they do? There's a whole bunch of supplies and material that's been clunking around in the back of that van for a couple of months, and now you cannot put it in a homeowner's house. And then it gets chucked. And that was wasted money. All of a sudden you have 5, 6, 7, 8 technicians that are going rogue because they love to buy stuff. That's also an issue with your vendors. So put a PO system in place. Number 3 is debt payments. So Depending on what you know about accounting, when you pay debt, the only part that hits your P&L is the interest. So if you have a $10,000 debt payment this month and 9,000 of it was principal, that $9,000 leaves your bank, but it doesn't hit your P&L. So if you have vehicles, if you have equipment, if you have an SBA loan, that's not hitting your P&L when you make the principal payments. Now, vehicles, equipment, all that is, you can depreciate it. So whenever you hear an accountant, a CPA talk about depreciation, that's why you do it, because then you're at least able to realize the wear and tear on that vehicle or that piece of equipment. But that doesn't mean it's cash in the bank. That's the thing. Depreciation isn't money. It's just a accounting method because the money is already left on your balance sheet. So where I see a lot of the people going through acquisitions and acquiring businesses to either start or grow is their debt payments are not factored into their P&L. And then if you have a couple bad months of profit, the bank doesn't care. They are still going to want their debt payment. So that's a big issue. Number 3 is debt payments. Number 4 is owner's draw. This also ties into any tax estimates or tax payments that you're making for your state or federal. So owner's draws do not hit your P&L. So if you are taking money out of the business, that is not hitting your P&L. Most business owners are surprised when I show them how much money they are actually taking out of the business, whether that's using their company credit card for personal expenses where the bookkeeper says that was a draw, or actually taking money out of the business through check, through ATM, whatever it might be. Like I said, that flows into tax payments as well. Whenever you're paying your quarterly taxes or your end of year taxes due, that is not hitting your P&L either. Why? Because it's not a business expense. It is money you owe after your income. So after, hey, this is how much you made, this is how much you owe, then you pay that bill, but it is not an expense. So that's kind of 2 in 1 because it should be classified as some sort of owner's draw. The next thing I see where people run into problems is payroll tax. So depending on how you process payroll or who processes your payroll, many times we don't pay our state or our federal taxes right when payroll is run. So sometimes that money's sitting in our bank account and we have to go pay that on a monthly or quarterly basis. All of a sudden we go pay that and our checking account is back to zero because we didn't realize, hey, we actually need to go spend all this money. And depending on how your accounting is being done, it might not be hitting your P&L until you actually make that payment. So that is a big issue I see. You guys probably hear about it all the time. They're evading payroll tax. Yes, there are many businesses that do it. Most of them do it not intentionally. They do it because they're bad at managing cash. They're not doing forecasts and projections, and they forgot or didn't realize or didn't know or didn't have the ability to pay all that once it became due. And then the last thing we'll get into is bad bookkeeping. That's plain and simple. Purely bad bookkeeping can inflate your profit significantly. The biggest place I see this happen is for companies that have bigger tickets where, say it's a $100,000 job and they take a $50,000 deposit. Many times, and I don't want to get too far into the weeds because this can get complicated, but the way your accounting software works is the minute you generate an invoice, it is counting that as income. So if you sold a job today, and it's not going to be done for 90 days, but you generated an invoice today in order to receive a deposit, then your bookkeeping software, accounting software is saying, wow, we just made $100,000 today, even though you actually haven't. Yes, you took a $50,000 deposit. That's technically not your money yet. It's still the homeowners or whoever you're doing business with because you haven't delivered anything. But you also haven't paid any expenses on that yet. If you took it in today, you haven't bought any of the equipment. You haven't bought any of the material. You haven't bought any of the supplies. You haven't paid any of the labor. But your P&L shows money sitting on your income statement because the way the invoice was generated. So bad bookkeeping can go many ways. It can go that way. It can also go just how we're classifying things. Are we classifying things properly? I've seen many examples where things have been very poorly classified. Chart of accounts not set up properly. All different things that inflate the profit, the bottom line, and that's the reason there is no money in the bank. So recapping those, number 1, accounts receivable. If it's taking us too long to get paid, we're going to have massive cash flow issues because we already have cash flow issues. And then if we're not getting paid, it becomes bigger. We go into debt and it's really hard to get out of debt. Number two is vendors. Depending on how we're classifying your vendors, are we setting them up in our accounting software? Do our technicians have the ability to pick out whatever they want at the supply house? That's a big issue. Number three is debt payments. Anytime we're paying principal debt, it is not hitting our P&L, but it is a big cash flow suck out of most businesses. Number four, owner's draw, ties into number five, tax payments. So anytime we're paying income tax, that is not an expense. It's not hitting our P&L. Same thing with owner's draw. Number six, payroll taxes. Again, this is really depending on how you're processing payroll or whoever's processing payroll for you. Are we actually realizing all of our payroll taxes right away, or only when we actually submit them to the government? So depending on the size of your business, some of them submit it right away, some of them every week, some of them every month, some of them every quarter. But it is a cash flow issue. And then lastly, just pure bad bookkeeping. If your bookkeeper is not doing things the way that need to be done for your type of business, not saying your bookkeeper is bad, I'm saying the bookkeeping is being done poorly for your exact business. So those are 6 or 7 things that eat into the profit, meaning there is no money left in the bank, even though your P&L says you had a great month, quarter, year, whatever it might be, when your accountant tells you that great job. And then you're like, but where's all the money? So how do we solve it other than what we already went through? We need a scoreboard with targets. We need to know what success looks like if we measure it. So how quick do we need to get paid? What do we want our gross profit to be? What do we want our labor rate to be? What do we need our marketing spend to be? What about our overhead? What about our office payroll? All the things that drive profit and cash flow, we need to set a target of where we want to be, and then we need to track against it to see, are we actually on track or are we off track? And the only way things improve is if we actually measure them. So that's one way to solve it. The other thing is timely bookkeeping. So making sure books are done on time. If your books are not done, in my opinion, by the 15th at the latest, ideally by the 10th, but latest 15th, you are working with really old data. So if your books are only closed once a quarter, or they're not closed until like the 30th of the following month, by the time you actually do something with that data, it's too late. It's a different season. It's a couple months past. It's just not going to serve you. Along with timely bookkeeping, accurate bookkeeping. So if the data is not right, if we go to use it to steer us in the right direction, we don't know which way we actually need to go because we're using data that is incorrect. So we need accurate bookkeeping. Number 4, we need proper cash flow forecasting. This is where a lot of business owners get stuck, is they make business decisions, financial decisions based on how much money is in our checking account today. And that's it. Oh, we've got $80,000 in the bank. Cool. Let's go ahead and do it. But if we look at all the other things we just talked about, maybe we actually don't have $80,000 in the bank. Actually, I guarantee you, whatever money's in your bank account right now is not actually how much money you have to operate your business. And then once we do those 4 things, again, there's plenty of other things, but scoreboard with targets, timely bookkeeping, accurate bookkeeping, proper cash flow forecasting. If we do just those 4 things, you'll be able to determine where things are broken in your cash flow model. Why isn't there money in the bank, even though our P&L says we have money? So that is it for today. That is what's eating into profit. That is why you do not have cash in the bank, even if your P&L says you should. If you need help with any of this, please go to the Blue Collar Advisors with an S, thebluecollaradvisors.com. There, you can book a call with me. We'll dive into your business. It's totally free. If you want to, we can also do a financial assessment to really, put the story to the numbers and figure out what's getting in the way of you achieving those financial wealth, prosperity goals that you set when you started your business in the first place. So that's all I got for today. Make it a great day. Make it a great week. We will chat with you guys soon. Again, if you need help, you want to chat, go to thebluecollaradvisors.com. And before we go, as you know, there are a lot of moving parts when it comes to creating consistent, positive cash flow. However, the journey starts with making sure you are priced right so you can have a growing and more profitable business. I have created a super easy to use pricing calculator for everyone in the trades. You will no longer have to guess what you should charge. You'll no longer have to call around your competition and see what they charge. This calculator is easy to use and will provide you confidence and clarity that you're actually priced right. It also comes with a step-by-step PDF guide and a video walkthrough. So head on over to thebluecollaradvisors.com/price. thebluecollaradvisors.com/price to download it today, and so you can start implementing it tomorrow. Until next time, remember, what got you here won't get you there. If you are ready for different results, it's time to start doing things differently.